Hello, EMU students. Welcome. My name is Aurel Schubert. I am currently honorary professor and lecturer at the Vienna University of Economics and Business and lecturer at a few other institutions here in Vienna, Austria. But I've been engaged in European statistics for more than 21 years, both as Director General of Statistics for the European Central Bank between 2010 and 2018, and before 13 years Director of Statistics of the Austrian Central Bank, Österreichische Nationalbank, and also later on 3 years chairing the European Statistical Governance Advisory Board. So what my task is, or what I will try to do, is to point out to you how important statistics are for policy making, especially here for economic and monetary policy making in Europe. So the title we have chosen is The Role and Function of Official Statistics for Policy Purposes. So I will guide you through the use or some examples of the use of data in monetary policy in the European Union, with the European Central Bank, and then also what is being used in terms of statistics for other policy functions, economic policy functions in the context of the European Union, which means in the context of Brussels. This EMU's course, Economic and Financial Statistics, is a joint venture between the European Statistical System, the European System of Central Banks, Eurostat, Destatis, the Deutsche Bundesbank, and the University of Trier. And I've been invited by the European Central Bank to do this presentation on the role and functions of official statistics for policy purposes. There has been a long discussion in economics about policy making, whether economic policy making is an art. So you decide according to your intuitions, your experience, or is it more a science that is really based on facts? And what we are arguing here is that more and more, and there are many examples which I will mention, policy making, economic policy making is evidence-based policy making. It is based on facts, which means in our case on statistics, on data. And as the former president of the European Central Bank, Mario Draghi, once said in 2014, policy making and indeed decision making are only as good as the information on which they are based. And this information for us are statistics, reliable, high quality statistics that allow policymakers to make the decisions. So there is no argument about the data. There can be then an argument about the best policy and about the conclusions from the data, but there should be no argument about the underlying facts about the data. And so policy making should indeed be evidence-based, and we have many examples in Europe, in the European Union, but also worldwide, obviously, where policy making is really largely based on evidence, on facts. So the topics I want to cover in this lecture is first of all a short introduction about the institutions involved in EU decision making, both on the economic side, economic policy side, and the monetary policy side, and then go into the policy uses of European statistics, first concentrating on monetary policy, financial stability, prudential supervision. So basically the tasks of the European Central Bank and the European System of Central Banks, or the Euro system, and show how their policy making uses statistics both for monetary policy, for financial stability policy, for prudential supervisory policy, but also in the context of the international role of the euro. And then I will move on to EU economic governance and other EU initiatives which use statistics, which are evidence-based, again in the area of economic policy making. So I want to cover a little bit the convergence criteria for monetary union. So the criteria a country has to fulfill to join monetary union. I will talk then about economic policy coordination in Europe in the context of the European semester framework, then go directly into the macroeconomic imbalances procedure and its scoreboard, which is again a scoreboard full of data, which gives us an indication how are the different countries in the European Union doing economically. And then one specific aspect is the Stability and Growth Pact, so the fiscal situation in the different countries in the European Union. Then move on also and mention briefly some other initiatives like the strategic foresight, resilience topic, or the sustainable development goals, which are again initiatives to use data to understand the situation in different countries. Sustainable development goals are actually a UN initiative, so it's a worldwide initiative to use evidence for policy making. So these are the topics I want to cover in the next 45 or so minutes. As promised, a quick overview about the relevant institutions in this context. Relevant EU institutions and decision-making fora. Just to recall again a little bit the main players. So first of all, there's the European Council of Heads of State and Government of the EU member states. So those are the heads, the prime ministers or presidents, whatever they are called in the different countries. They define the general political direction and the priorities of the EU. And then it's the European Parliament and the Council of the European Union. So these are the various bodies of ministers who are then the co-legislators of EU laws. So these are those who are then actually making the EU laws. And all European statistics basically are based on such laws. And so you have the European Parliament with about 705 directly elected members of Parliament. And then you have the different ministerial councils, the Council of the European Union, where either the finance ministers or the economy ministers or the justice ministers, etc., are meeting. And these two bodies together are the co-legislators who are actually making the laws based on proposals from the European Commission. The European Commission has 27 commissioners, so every EU country has a commissioner. And Ms. van der Leyen is the president of the European Commission. So this is then the executive arm, but these are those who have the prerogative to make legal initiatives, so drawing up proposals for new EU laws. As I mentioned, all EU statistics are based on a law. And then on the other side, on the monetary policy side, you have the European Central Bank. And the European Central Bank has also the power to develop statistics, to make statistical regulations for its purposes, so in the financial area. So the purposes being either monetary policy, financial stability, or for prudential supervisory purposes. And the highest body of the European Central Bank who decides on these laws is the Governing Council, which are the governors of the 21 participating member countries plus the 6 executive board members of the European Central Bank. So these are the bodies who are behind all the statistical laws which are relevant for all those statistics which we will be mentioning in this presentation. So starting with the ESCB statistics, so the statistics of the European system of central banks, let's start with the functions of the European Central Bank. So the European Central Bank has basically 3 broad functions. The one, which was the initial function, is namely monetary policy, to do the monetary policy for all those countries participating in the monetary union, the European Monetary Union. Then, after the great financial crisis of 2007, 2008, and after, the ECB received a much stronger function for macroprudential policies, for financial stability purposes. And so you have now add this additional function, macroprudential. And then in 2014, the ECB became the supervisor for the for the euro area, the bank supervisor. So that's the bank supervision function. So the right in the triangle, the right brown triangle. So these three functions, all these three functions require a lot of statistics and data. So you need the data for monetary policy purposes, you need it for financial stability, for prudential supervision, for the oversight of the payment system, and several other functions of the ECB require data. And important is that that data the ECB uses is primarily focused on the euro area. So on the currently 21 countries in the euro area. And they are all regulated, as we said, by the ECB based on ECB regulations, the ECB being the lawmaker, as we said in the previous slide. And what is important here is that all the member countries cooperate. We said in the decision making is in the governing council, where all member countries are represented by their central bank governors, and that they follow standards, fixed standards, so they are really comparable, that you really can produce aggregates for the euro area which are consistent and fit together. What are then the tasks of the European system of central banks? So Article 127 of the Treaty on the Functioning of the European Union, so the basic law of the European Union, and attached to it the Statute of the European System of Central Banks and the European Central Bank, they define what are the tasks, or what is the primary task of the European System of Central Banks. Namely, the primary objective of the European System of Central Banks shall be to maintain price stability. So there, the task is defined by law. What, however, the treaty does not define what actually price stability means. For our purposes, what rate of inflation is still price stability, and what methods to use to calculate the inflation. So it was then up to the European system of central banks, and then the so-called ECB Governing Council, the body I mentioned already before, to define exactly quantitatively what price stability means. And so there was a first definition in 1998. I don't want to go into that. Then in May 2003, there was a revision, and there it was then said price stability is a year-on-year increase in the harmonized index of consumer prices, the so-called HICP, for the euro area of below but close to 2% over the medium term. So the definition of price stability was an inflation rate of below but close to 2% over the medium term. And then in 2021, so 5 years ago, basically there was a strategy review, and the strategy review reviewed and changed a little bit the definition of price stability. Price stability today is defined as a symmetric 2% increase in the target over the medium term, measured by the HICP, by the harmonized index of consumer prices. So over the medium term, it should be 2%. So that is now the task in the terms of monetary policy. But as I mentioned before, the ESCB has other tasks in the meantime also. I will turn to those on the next slide. So beyond ensuring price stability, the central banking system has also the function to contribute to the smooth conduct of policies pursued by the competent authorities related to prudential supervision and to the stability of the financial system. And concretely, so there are these two aspects to financial stability. One is the microprudential supervision, which is now called the single supervisory mechanism. As I mentioned, since 2014, the ECB is in charge of banking supervision, and this single supervisory mechanism exists since 2014. And already since 2010, basically 10-11, there is also a stronger focus on macroprudential supervision, so general financial stability, and especially there is a body in charge of contributing to that, which is located at the ECB, and the ECB president is also the chair of that body, which is called the European Systemic Risk Board. So which brings together the supervisors from the different EU countries, both banking supervisors, insurance supervisors, market supervisors, and the idea here is really to have everybody relevant for financial stability meeting together and having together an assessment of the situation of financial stability. And as you can imagine, that's the topic of our presentation here. All these functions, both the microprudential, where you look at individual banks, as well as the macroprudential, where you look at the overall system, require a lot of information. So the decisions, the recommendations of these bodies and these institutions can only be done on the basis of hard data. And so both are very much data dependent. There is a famous quote by the first president of the European Monetary Institute, which was basically the embryo of the European Central Bank, who said in the context of statistics and the statistical needs, nothing is more important for monetary policy than good statistics. So he pointed already back then, before monetary union started, because that quote is from 1996, how important it will be to have the data so that really monetary policy for the euro area can be done on the basis of really facts and hard data. To be more specific about monetary policy and its data needs, here is a graph showing basically what happens here when analysis takes place in order to prepare monetary policy decisions. So when we start at the top of the graph, we see what we said before. The objective, the final objective and primary objective is to maintain price stability. And as we said, the governing council is the decision-making body who makes the decisions about monetary policy. So usually the questions about changing interest rates, central bank interest rates. And in order to be able to decide, they need information on the state of the economy, the state of the economy of the euro area. And this analysis is basically divided into two parts, the so-called economic analysis, which you see on the left side, and on the right side you have the monetary and financial analysis. And so what is, and these two analyses are then put together in order to deliver a decision. The economic analysis focuses on all the information basically about the economy, about the real economy, while the monetary and financial analysis focuses on the financial side of the economy, and I'll come back to that in a moment with more details. But so there are all, and behind these two blocks, you have enormous amounts of data, which I will focus on in a minute. So that's what we call the full set of information. That full set of information is put at the disposal of the decision makers, and on that basis they take the decisions either to leave interest rates unchanged or to raise interest rates or to lower interest rates, depending on what the state of price stability is or what they expect the state of price stability to be in the future. Now, to get to the details, what is relevant, what kind of information is relevant, we have here the so-called transmission mechanism of monetary policy. So you have now at the bottom, you have the objective, namely price stability, so the price developments. On the top, you have what we just mentioned, the instrument, which is usually the interest rate, changes in interest rates. Now the question is, if there are changes in interest rates, what are the effects? So how do changes in interest rates affect price stability? And that is a long and variable process, long and variable in terms of how long it can take, and it entails a lot of elements. And these are the elements, these boxes. I'll come to some of them in a moment. And that's where you need information. So you want to know exactly when you change interest rates as a central bank, what kind of effects does that have? And so you have to look at the different markets, at the different parts of the financial system. And so if you look at in the top right, you see like money market interest rates. So when the central bank changes its interest rates, the interest rates in the money market will be affected. The money market is where the big players in the money market, in the money markets, so banks, big insurance corporations, others are exchanging money among themselves for very short term, usually, often as unsecured even. So if it becomes, let's say, more expensive to borrow from the central bank, then here the money market interest rates will also go up. And once these money market interest rates adjust, they will have effects on, becomes in the next line. It will have effects on credit, for instance, that if interest rates get higher, people will take fewer loans because they become more expensive, and if you take fewer loans, then the amount of money in the economy will grow slower. It will have effects maybe on asset prices, so take stock prices, for instance, because high interest rates will have effects on enterprises, and so on the profit side of enterprises, and so the asset prices will adjust. It will have effects on bank interest rates, so the interest rates the banks are then charging their final customers, either for loans or which the banks are paying their depositors, so bank rate interest rates will change. And since we are living in an interconnected world, changing interest rates in the euro area might have effects on the exchange rate of the euro relative to other currencies in the world, like the US dollar, first of all. So again, so there will be here these effects, and to know how big the effects are, how quick the effects are, how strong the effects are, you need information on credit growth, money growth, you need information on asset prices, you need information on the retail interest rates of banks, both for depositors and for debtors. You need information on the exchange rates of the euro. And then come the effects on the real economy in the next line. These changes in credit, this change in asset price, the changes in bank interest rates will have effects on the real economy. It will change in the markets because, for instance, goods become more expensive. So the supply and demand of goods and the supply and demand of labor might be affected. So wages might be affected. The price setting by enterprises will be affected. Again, to know whether this is happening, you need information on these parts of the economy. And then all these together will have effects on inflation, namely on the domestic prices, and through the exchange rate effects, also imported prices might be changing. Again, also for this, you need information to know what is happening, how big it is, what is happening. So that's the so-called transmission mechanism of monetary policy, where in all these boxes you need information. But the euro area is not an island, as I mentioned already. There are also other possible effects outside of the central banking community. So there might be shocks, as we call them, shocks which affect the economy independently from the monetary policy. So there might be changes in risk premia, for instance, if a war breaks out, like we have it at the moment, then the risk premium might change, and independent of the central bank policy, interest rates, credit spreads, all these things can change. Or there can be changes in fiscal policy, very important. If governments change their fiscal policy, again, that will have effects, for instance, on income, on prices, it can have effects on stock markets, etc., independently of the monetary policy. So even if you don't change your monetary policy, the effects of fiscal policy might change the economy. Or changes in commodity prices, for instance. Now also very topical, if the oil prices, the gas prices are suddenly changing strongly, this will affect obviously the overall economy independently of the monetary policy. So also all that needs to be known. So also for these boxes, so to speak, you need information, real time or as close as real time as possible, information for the central bank. in order to make the right assessment of the economy, the right economic, you remember monetary and financial analysis, so to make really an evidence-based decision at the end of the day. Now let's turn now to what the Euro system or the European system of central banks is producing in terms of statistics. And here it's maybe important to point out that central banks in general, but especially the central banks in the Euro area and in Europe, are basically Janus-faced relative to statistics. They are extreme users, power users of statistics. As we just mentioned, they need a lot of statistics to be able to function, to fulfill their functions and their tasks. On the other side, they are also producing a lot of statistics. They are producing a lot of European statistics, as you also heard in other presentations. So they are producing official European statistics. And so now we'll turn to in which areas are the central banking community producing Euro area statistics. So here the very first is, as we said, for the monetary policy and for transmission. So there are data, for instance, the monetary developments in the Euro area. So all these you can access at the ECB website. So monetary developments in the Euro area tells us basically how quick is money growing in the Euro area and what are the drivers of money growth. Is it credit growth or is it the foreign side? So that is monetary developments. Then you have the interest rates. We mentioned in one of the boxes, if you remember just before, Euro area bank interest rates. So again, we need statistics, and the ECB is producing statistics on retail bank interest rates. So are the banks changing the interest they pay their depositors? Are they changing the interest they charge their debtors? And then we have a Euro money market statistics. Here is the very first box, which I mentioned before, the money market. So monitoring what is happening basically on a daily basis, what is happening in the money market. Are interest rates changing or not? What are the quantities that are being exchanged in the market, in the money market? So you have here for the monetary policy itself, a very wide set of statistics which are being collected and produced by the European system of central banks and the ECB specifically. Then we have the external side. We have balance of payments, Euro area balance of payments, and Euro area economic and financial developments by sectors of the economy. Again, here, very detailed statistics being produced by the ECB. Now, especially in the area of balance of payments, but also in both of these areas, you have joint work with Eurostat, because as you might know, the balance of payments has a real economy side and the financial side, for instance. So you need here a close cooperation with Eurostat and the European system of statistics. And then a financial structure, because banks are important in Europe. Banks are predominantly important in Europe, much more than, for instance, in the US. But there are other crucial players in the financial system, which are also giving credit or taking deposits, or which play also an important role in financing the overall economy. And so we need information on those, especially as these other areas are growing very, very fast and partly are even bigger already than the banking sector. So we have here data, for instance, and Euro area securities issue statistics. So enterprises, for instance, don't have to just take loans. They can also issue securities, which is another way to finance themselves. The governments obviously finance themselves to a very large extent by securities. Then you have the other side, so the investment fund statistics, so the money of the privates and of the enterprises often is not invested in bank accounts, but in investment funds. So you need information on the investment fund industry. You need information on the pension fund industry, because a lot of our wealth is parked in pension funds. So pension funds have a lot of assets, a lot of money at their available, which they again can lend out into the economy by either buying securities or even giving loans. You need information on the insurance corporations, because they are big players in the economy. They are collecting a lot of money from their customers, and they have a lot of money which they again invest in the economy, both domestically or abroad. We have also financial vehicle corporations statistics. So there is a very wide range trying to cover the overall financial sector and not just the banking sector. And then there is also a very large part of information on the payment system, on the payments infrastructure. Here also the central bank has a large responsibility for the stability of the payment system infrastructure. So again, in order to ensure this task and to fulfill this task, you need a lot of information. As I mentioned, all this information is available on the homepage of the ECB, and you have the links here where you can get directly to the relevant parts. But that is the part which the ECB or the Euro system produces itself. But as I mentioned in the transmission mechanism monetary policy, you need much more information. You need information on wages, on prices, on exchange rates, on asset price, etc. So for its decision making, the ECB obviously and the Euro system uses other statistics which are produced by the European system, as European statistical system, or by Eurostat, or they are produced by the International Monetary Fund, the Bank for International Settlements, the OECD, or they are actually bought from the market. There's a lot of data is bought from the market because it wouldn't make sense to produce it in the central bank if it already exists in the market. So data on exchange rates, data on asset prices, many other parts of the market are data which you can buy in the market, and if the quality is appropriate, you can rely on those. So the overall information set which the Governing Council receives for its decision making is not just statistics produced by the central banking community, but statistics produced by Eurostat, statistics produced by other international organizations, or market data, and all that together gives the full set of information that is required for evidence-based policy making in the central bank. Now, up to now, the focus was specifically on monetary policy, although many of the data which I just mentioned before can be used for other tasks also. But as I mentioned much earlier, the ECB has three big tasks. One is monetary policy. The second one is macroprudential stability, to ensure or to contribute to macroprudential stability. And I mentioned there is this ESRB, the European Systemic Risk Board, and this European Systemic Risk Board, which is responsible for the macroprudential oversight of the overall EU financial system, not just euro area, the overall EU financial system, and which is supposed to prevent or mitigate systemic risks. They need information, a lot of information, in order to do what their task is, namely to issue warnings, to make recommendations. As I mentioned, it's the overall EU financial system, so it's not just banks, it's also insurance corporations, asset managers, shadow banks, financial market infrastructures, other financial institutions and markets, so everything that belongs to the financial sector. So they have to look at the overall financial sector. Now that would be millions of information. And so in order to put that information into a digestible form, the law, the regulation which set up the ESRB requires the ESRB to develop something which is called a risk dashboard. Really, for the main risks, there is a dashboard with statistics and graphs which show you the situation. And this ESRB risk dashboard, you can easily access it through the internet, is a set of quantitative and qualitative indicators of systemic risk in the EU financial system. It's published or updated quarterly, and so that is really the information basis which the members of the European Systemic Risk Board receive in order to see where are actual or potential risks in the EU financial system. So where are those areas where we should be looking at specifically, or where we should actually make them recommendations or even take or have the competent authorities take actions. So you have this ESRB risk dashboard, which condenses all this information into still a lot of data, a lot of statistics, a lot of graphs, trying to also to group all this information into the different risk categories. So what is the market risk? What is the solvency risk? What is the macroeconomic risk? And other risks that exist in the financial system. And here at the end, I just have a link to two recommendations, for instance, which the ESRB has done in the last few years. One, for instance, on a real estate data gap. So they identified that on the real estate sector, which is a crucial sector and which also caused a lot of problems during the great financial crisis, there is too little data on that. So they made a recommendation what kind of additional data would be required in order to be able to do evidence-based policy making in that area. And there is also, for instance, a recommendation on identifying legal entities. So that's, I don't want to get into any details, but again, it's something to help measuring or help identifying risks early on. So this is, so to speak, the macro prudential side of central banking, the data, especially as not all the data, but important data that is available and being used for the macro prudential side. Now I want to let's say focus briefly on a different aspect of central banking, of ESCB central banking, that also is very, very data intensive, and that is the monitoring of the international role of the euro. The euro is a very important international currency. You know, the euro exists since 1999, so now about 26 or so years, so a quarter of a century. And the question is, what is the international role of the euro? I mean, domestically, it's clear in the euro area, you have to use the euro. It is the legal tender here. But is the euro also used internationally, or is still the dollar dominant or other currencies dominant? So in order to monitor these and to see how much the euro plays a role internationally, how it's accepted internationally, you have to gather a lot of information. And so there are different aspects of an international currency. So for instance, is the currency used in other countries' foreign exchange reserves? So is the euro part of the foreign exchange reserves of, let's say, I don't know, India or Pakistan or African countries or non-euro European countries? So that's, for instance, an indicator for how important is the euro for other central banks. Or is the euro used in global foreign exchange markets? When people exchange currencies, they move into other currencies. What role does here the euro play? Or if countries take out loans abroad in foreign markets, in what currencies do they take those loans? Do they take any of those loans in euros? Well, how important? Or if they issue securities abroad, issue securities in foreign financial markets, do they use the euro as their currency in that or not? Or do they all use only the dollar? Also the cash, if you travel around, in many countries of the world, the local currency is not very stable, and so people use foreign currencies, more stable currencies, usually the US dollar, but especially in European countries outside of the euro area, the euro might be playing this role, but also around the rest of the world. So how much cash, euro cash, is outside of the euro area and is being used outside of the euro area? So in order to have a picture of these developments, the ECB produces every year an annual report on the international role of the euro. As you can imagine, you need a lot of statistics and a lot of not easy to collect statistics on all these different aspects. One aspect I didn't mention is invoicing currency. Is the international trade in goods and services, what part of that trade is actually where the invoices are written in euros? For instance, that the oil gas market is in dollars usually. It's always the quote of oil prices is in dollars. But the question is, how much of international trade is invoiced in euros. So to measure all these, this report, International Role of the Euro, which is extremely data statistics rich. And in addition, there is the political goal from last year where the EU leaders tasked the European Council, the Commission, the European Central Bank, really to advance the work on the international role of the euro. So there is really also the push that we want the euro to be more used internationally, to play a bigger role internationally. Its role should be strengthened, and again, to know whether you have achieved this, how well you are on the way to achieve this, are there any changes in the right or in the wrong direction. You need statistics. You need here very, very not easy to collect, as I mentioned, information, and that is again here evidence which you have to collect and which is published and used at least once a year for the report on the international role of the euro. The other big task of the European Central Bank and the euro system that I mentioned already before is micro banking supervision. So banking supervision, since November 2014, ECB is in charge of banking supervision. Now, banking supervision means that you are monitoring individual banks. And especially ECB is in charge of monitoring the 130 or so big banking groups in Europe, what we call the significant institutions. And so you need data on all these institutions, which is obviously very often very, very confidential because it's about the individual bank, but that is needed and that has to be collected. Now, obviously, this cannot be published since most of us are individually on the basis of individual bank because it is confidential. If you on the market, if the people outside would know exactly let's say certain exposures of the Deutsche Bank relative to certain debtors, for instance, these are very confidential information. So what the ECB does, it collects this information, puts it at the disposal of the supervisors, the called SSM, the single supervisor mechanism, which is in the ECB, the banking supervisors. But in terms of transparency, it publishes aggregated supervisor banking statistics for instance, about the balance sheet compositions, profitability, capital adequacy, asset quality, the funding, the liquidity, also the data quality. So these are aggregated information so that the market out there also knows what's going on in the European banking system. So this is again a big task which is extremely data dependent, and I used to say there is no banking supervision without data, and there is no good banking supervision without good data. So you need this data really has to be correct because it's on the basis of the individual bank. So it might lead that a bank is being closed or a bank is being fined on the basis of that information, and so that needs to be really of highest quality. And so also this task is with ECB. So that's again evidence-based banking supervision, an important task of the European Euro system and the European Central Bank. So now we have covered basically the central banking part as a monetary policy, financial stability, prudential supervision. And now I want to move to the other part, basically we could say from Frankfurt to Brussels, to EU economic governance and other initiatives which require a lot of data. That data comes to a large extent from Eurostat, from the European statistics system, but also data from the central banking system are being used here in these some selected policy uses for EU economic governance, which I have picked out for this presentation, are first of all the convergence criteria, so the entry criteria for monetary union, which the countries have to fulfill if they want to enter the euro, so to speak. Then the European semester framework, which is basically the economic policy coordination in the European Union, the macro imbalances procedure, scoreboard, which has the goal to identify early on and as an early warning system if there are problems, economic problems in one of the member countries. The Stability and Growth Pact, which monitors and limits the fiscal space of governments of the countries. The Sustainable Development Goals, the UN initiative, which is also obviously followed in the European Union, and then a few other key EU priorities, which I quickly will mention, which all have one thing in common. They are all data-based. They require a lot of information on countries, on markets, on certain aspects of the respective economies. Now, the European Monetary Union or Economic and Monetary Union Convergence Criteria, as I mentioned, the criteria that are measuring whether a country is able to enter into monetary union. So it measures the progress of the countries in the preparedness to adapt to the euro, is based on a set of macroeconomic indicators and then a few other relevant factors, but basically what's relevant for us are here now the macroeconomic indicators. So at least every 2 years there is the measure of the assessment of those countries, EU countries who are not yet part of the euro. They are being assessed whether they are ready, economically ready to join the euro area. So there are 2 reports, one by the European Commission, one by the European Central Bank, done usually every 2nd year, but sometimes it's done if a country requests it even in between, as you have the links here to the last report. So on the basis of this assessment, then the European Council submits a proposal to the ECOFIN Council to decide whether a member country should adopt the euro or not. So this is absolutely crucial here again, that statistics data are used for a very administrative purpose, namely to allow a country to join the euro or not. So you can imagine how important here again the question of the quality of the data, the reliability of the data, the comparability of the data is, because it decides on whether you can join the euro area or not. And there have been cases in the past where a country was not able to join the euro area at that time when it first wanted, because one of the indicators showed that is not sustainably achieved what is being required. Now, more concretely, without going now into the details, is the 4 big areas of convergence criteria. Is the first, price stability. So you have to be able to show that your average inflation rate is not more than 1.5 percentage points above the rate of the 3 best performing member countries in the monetary union, and it's based on the basis of the harmonized consumer price measurement. So it has to be a harmonized measure, and then it is checked where are you standing as an individual country. The second big block are the sound public finances, so government deficit and debt. Again, here it is being looked at very carefully that your numbers conform to what is required, so that you're not under the excessive deficit procedure when this is being examined. Then you have also the question of long-term interest rates. So how much is your convergence really seen by the market? Also, the long-term interest rates are a market indicator. So here the goal is, again, you should not be more than 2 percentage points above the rate, the average rate of the 3 best performing member countries in terms of price stability. So again, you're measured relative to the others, to the best in the group. How are you? So are you really prepared for monetary union? And the 4th block is your exchange rate developments. You have to be participating in the exchange rate mechanism of the EU for at least 2 years without several severe tensions during that time period. And so again, without going into any details of the economics of that, you see again here, it all requires data on harmonized data on inflation, harmonized data on government deficits, government debt. You need harmonized data on interest rates and on exchange rates. So all this, again, crucially based on real. Another initiative, EU initiative, which requires a lot of data and statistics, is the so-called European semester. European semester provides a framework for the coordination of economic policies across the European Union. You remember again that at least 21 of the countries have a common monetary policy, but what about the other economic policies? The other economic policies are still in the sovereignty of the individual countries, but in order to not to get into problems, and also for monetary policy not to create problems, you need a certain coordination of the economic policies so that the countries don't go in completely different directions with their economic policies. So you need coordination of economic policies, with specific goals, ensuring that sound public finances are everywhere, preventing excessive macroeconomic imbalances in individual countries, supporting structural reforms so that more growth, more jobs, more potential growth in the economy, boosting investment. So these are some goals which are being set. And here the policies are coordinated, but you can only coordinate policies if you know what is exactly happening in the countries, and if you can set goals, quantitative goals for that. So the goal here should be accompany the transition of the economy in the European Union, which is currently digital climate transition, with environment, sustainability, productivity, fairness, macroeconomic stability. So all these things require data so that you can really credibly coordinate, harmonize, coordinate, and even criticize if somebody doesn't do the right thing. So the European semester, again, very, very data hungry procedure in the European Union. One area that receives a lot of interest, political interest, is obviously the area of fiscal policy, of public finances. And here the Stability and Growth Pact is the central element in the European Union's economic governance. So the idea is here really that countries should have a sound public finances, and with that they shouldn't interfere with other policy areas like with monetary policy, with unsound public finances. And you might remember there was a Greek financial crisis, Greek fiscal crisis about 12 or 14 years ago. And also here, the fiscal policy or the fiscal data played an extremely important role. And so there is a lot of emphasis having here the right statistics. I don't want to go into any details here, but what's also important that here statistics are again used for administrative purposes. So if your data is not good, so to speak, or if your fiscal situation is not good based on harmonized data, then you might actually be fined at the end of the day. So it's absolutely crucial that the data has to be reliable, has to be comparable, has to be of highest quality. So there is a lot of emphasis here to get the data right, and here evidence-based policy making is absolutely crucial. The macroeconomic imbalances procedure again is very, very data rich. It is basically the idea to have an early warning system to identify macroeconomic imbalances early on. So basically to avoid like what we had in the great financial crisis, that we are all suddenly surprised by the problem. So it consists of a scoreboard, the so-called MIP scoreboard, with 13 headline indicators and another selected indicators. So it is extremely data rich, and there is a report done every year. You can also look at it in the internet. But again, they are very much data based, and you need a lot of data. And the next slide, you see the whole line of data without going into any details that are required here. They come either from Eurostat or from the European Central Bank. This is the list of the indicators used. They are coming to a large extent from Eurostat, but as I mentioned also, several are coming from the central banks. Very quickly to another area where statistics are being used, namely on a worldwide basis, the so-called Sustainable Development Goals of the United Nations. There are 17 Sustainable Development Goals, going from no poverty to no hunger to good health to climate action, or a clean energy, affordable energy, etc. Very wide range. You have the list here. So again, they require good statistics, comparable statistics, worldwide comparable statistics. Now in Europe, Eurostat reports regularly on the progress in Europe, but obviously the data situation in Europe is much better than in some other parts of the world. But it shows that also on a worldwide basis, data, evidence-based plays a bigger role, more important for policy making purposes. And finally, here a list of several other data products which are related to EU strategic priorities, where the data comes from Eurostat, which are being produced in more and more to give policymakers a sound basis for the decisions, to show them how things are developing and where there is a need for action. So for in the areas of energy, digitalization, housing, migration, regions, demography, all important topics, policy important topics, which require good, reliable information. And I'll show you on the next slide one slide from, for instance, on the level of digitalization in Europe, which is being very carefully watched. So as promised, here you see the level of digital intensity in businesses in the different countries in the European Union. And you see how Finland, Denmark on the one side, or Bulgaria, Greece on the other side, you see here. But again, that based on data, based on statistics, you see policy relevant information on which you can build any policies if you want to further digitalization in Europe. You know where to start and where to go, or what are the models in this respect. So for me, it's now to finish here. I tried to give you this overview about evidence-based policy making in the European Union in different areas, from monetary policy, financial stability, to other economic policies, up all the way to digitalization. So economic policy making is no longer an art as maybe in old days, but it's very much strongly evidence-based decision making, evidence-based analyses. And as Alexander Lamfalussy, which I quoted in the very beginning, said, statistical information is necessary to decide, that's what we talked about, what policy actions to take, but also to explain them and to assess their effects after the event. Unless policy can be justified and explained by data, it will not be understood, and the institution carrying it out will lack the credibility. So at the end of the day, statistics is much more than just decision-making basis. It is really the tool to explain decisions, the tool to monitor the effects of decisions. And at the end of the day, it is part of credibility. It's part of the standing of an institution if it can explain its policies by using statistics. So with that, thank you very much for your interest in following this lecture, and good luck.